Welcome to the Paru Zings, Appraisers on Purpose podcast. This podcast showcases inspiring appraisers and professionals from the industry who are leaders in their field. How did they get to where they are? What have they learned along the way? And what do they do now for their teams, their clients, and the industry? Your host is real estate investor, entrepreneur, and appraiser, Michael Hobbs.
So Don, thanks for joining us on the Perusings Power Values podcast. Thrilled to have someone with such a pedigree as yours, one of the, I would say, truly rare individuals in the profession that's fourth generation. And when we think about the experience that many people either have not yet had or don't even know that they could have, I think you are an amazing example of a life around the industry and stories upon stories. So welcome.
Thank you. Thanks for having me today, Mike.
I appreciate it. Well, I would love to start out with just for people who have never even considered that someone could be a fourth generation appraiser or valuer. What does that look like? How far back in history does that go? And how many family members are we talking about on which sides?
Well, this would be on my mother's side. And my father married into the family. So it goes back to my mother's grandfather, 1914, started a savings and loan, which at that time was called a building and loan, in the back of a hardware store in 1914 in Cicero.
Wow. And
so in those days, one guy wore multiple hats. And an appraisal at that time was nothing more than a number and a signature, going right back to the basics of USPAP. That's all it was. And it didn't mean that they knew any more or any less than we do today, because appraisers had a very small market typically, instead of what we see today where we go over wider areas and have many clients. But so 1914, back of the hardware store, and then his son, my grandfather, at some point took it from there. Several of my great uncles were also appraisers. And then my father married into the family. So he was an appraiser. I believe my mother's brother, for a very short period of time, did some appraising as well. And all those people are basically all dead, except for my uncle, who's been out of the business for many, many years. And my cousin. So I have a cousin that's actually about a fourth cousin to me, that we were fairly close growing up. And he actually got into the appraisal business just a little before I did. So he's about 50 years into the business.
Wow.
And so he and I are the only ones left out of all the family members and all the relatives that have come into it. And my children have decided to go into other things, which is okay. You know, my family never said I had to do this. It was I was asked at one point when I was a teenager, as a teller in the savings and loan business. I was asked if I was interested in getting into the appraisal department, and so I didn't really, fully comprehend what my father had done before me and uncles and so on. But the chief appraiser, who came up to me for the savings and loan while I was working in the tower line at 18 years old, I asked him, well, could you tell me what would I have to do? He said, well, you'll be able to work on appraisals and you'll get out of the office. I said, wait a minute, you mean I get to get out of the office that I've been trapped in all day?
Wow.
So I kind of said this was like a no-brainer. I said, where do I sign up to get out of the office? And so that was kind of how it began. So I started part-time. Actually, well, it was full-time that summer, right out of high school.
So what year, to kind
And
of put that in
so I
perspective, Don, what year are we talking about? Because I think,
1977.
see, that's amazing, because when we think back now to your origin story in 1914, what a pivotal year in U.S. history that was. For many people, they don't have any perspective. But I mean, back then, the country only had 100 million people here. And that was the year 1914 that Babe Ruth first started for the Red Sox, to put it in perspective. And being a Chicago guy, I know you'd appreciate that Wegman Park started, which was the precursor to Wrigley Field in 1914. Huge time. And back then, Ford Motor Company took a big step of instituting $5 a day wages. So we've seen so many things. And of course, in 1914 was when Germany invaded the neutral country of Belgium, and the Panama Canal opened. So so much happened in 1914, including the Martin legacy of 4 generations of appraisal. So here you are in the 70s, coming as a part-time opportunity, getting into the field.
And computers probably weren't even thought of by anyone then, or those that were thinking of it had no perspective as to what exactly that might mean someday in the future. So we've gone through amazing transformations with technology, obviously, since then, and going all the way forward to 1977. So at that point, there was a little bit of technology. And when I say little, I mean like really little in contrast to today. But we had computers that we'd already had for years at that time, and but the computers that I had in high school were so big, and that you could walk inside them. They were so big. They were about the size of an average bedroom. And the computing power of a typical smartphone it had to be at least 1,000 times more for a smartphone today, to put it into perspective, as to the computer that we had when I was in high school. And we had fax machines at the time. But anybody today that tried to operate a fax machine that we used 45 years ago would pick it up and smash it against the wall until there's like nothing left of it. So most people that will hear this probably don't know what a player piano is, but they used to have, and you see them at museums. The player piano, they had these spindles of pre-punched paper that had the music on it, and you loaded the spindle with these like punched holes into it, into these player pianos, and it would play by itself. Wow. And so the first fax machines, they had a telephone with a rotary dial on it, and you had a cradle like that you hold to talk with, and so you would take the cradle and you would put it into like an armrest in the fax machine.
Yes.
And load the paper in one piece of paper, and you would load that one piece of paper by wrapping it around a spindle. Load the spindle into the machine.
Amazing.
Put the cradle into the machine, and then dial the number. And so it would take, if you're lucky and it came back clear on the destination side, it would take 5 minutes at a minimum to get that one piece of paper through to fax it. So because I worked for a savings and loan, they were communicating, trying to make a transfer of a document to another financial institution. So to send one piece of paper would be about 5 minutes. And the tellers actually, we were online through a telephone system with a data bank in downtown Chicago. And so that data bank connected to all the teller terminals by phone lines, and was amazingly slow. But it was considered a big advancement to make our transactions.
Sure.
And we had just gotten involved in a little bit of branch banking as a state chartered institution, but we were only allowed to have state chartered institutions within a very short distance. And because computers were not like they are today, we still had cards that we used to have to pull to record transactions. So we would have to walk back to a file and pull a card that was maybe, I want to say, about 5 by 8,
mm-hmm.
and put it into the machine to record the transaction, and then put this card back. Later in the day, at the end of the day, you file all your cards, and that was how we recorded our transactions in those days. If you came in for a withdrawal or a deposit. And so the appraisers, we had no computers, none at all. Everything was in book form, and so it really was. But I would say about 7 years later, as computers really started coming into the hands of appraisers, and they were far crude today in contrast to what we have now. But so that was how I got my start in the appraisal business, though, and to kind of put it in perspective, a little bit about what it is that we had to work with, and the technology we had. Well, basically, our technology was the cell phone. Was not a cell phone, but a pager. Nobody could afford pretty much the first cell phones that came out on the market, which I think was like in the early 80s. There was the early to mid 80s. We had what was called the bag
phone. I remember that.
And this thing was, like, the bag phone. And so that thing was huge, but it actually gave pretty good communications.
Mm-hmm.
And then we had what was called the boot phone that followed that. And why do they call it the boot phone? Well, it's kind of looked like a boot that would have been like ankle high boot, and the thing was huge to hold it up to talk to.
Oh my goodness!
So and every time my boss, who was the chief appraiser, would need me, because maybe I was out in the field, to say, hey, while you're out, go look at this other property.
Yes.
He would page me on my pager, and then I would have to look for basically all. I don't even know where you would find one. Yeah, payphone.
Payphone. Yeah, you had to go find a payphone. You had nickels and dimes and quarters and everything. Yeah.
Oh yeah. Yeah.
Oh,
so
wow.
pretty much every grocery store had a payphone in it. You go to A&P, Kroger's. They'd all have like a payphone in their lobby. Most restaurants had a payphone in their lobby. And all the gas stations would have payphones in the parking lot.
Yes.
And occasionally you'd see payphones on the side of the road, maybe near a bus stop or something. So there was lots and lots of payphones in those days.
They were prevalent.
But yeah, then you either had to pocket full of change, or you had to make a collect call. And so we just made a collect call back to the office and did it that way, and didn't have to worry about having any change on us. But it was, you could just imagine what kind of a nuisance that was to have to, you get a page, then you got to go find a payphone, and you got to call in. And so, here, people think, okay, well, if I've got to answer a call legally, I have to pull over and stop, as opposed to, talking while I'm driving and potentially causing an accident.
Oh yeah.
So people think that's a big nuisance to have to just, pull over and talk on the phone. But yeah, it could take us, 5 or 10 minutes to find a place that had a payphone to pull over, and then hopefully the phone worked, and most of the time they did. But all the truck stops had phones. All the rest stops on the expressways had phones, and so there were a lot of phones. But we had everything in book form as far as our comps.
And when you say book form, Don,
in the savings
to get a sense of it, you want to kind of describe how big those books were, because they may have some idea of what a book looks like from a paperback standpoint, but you're not referring to that at all.
No, so the books that we use for some of the bigger boards would be like the Sears Roebuck catalog. Of course, most people probably don't know what that is anymore either. But most of us have seen something that resembles like a Chicago phone book that would be maybe 6 or 8 inches thick,
yes,
and or thicker. And so some of the bigger real estate boards, their books were, for the annual books, were that thick. But then depending on the board, they may have a monthly publication, they may have a quarterly publication, and on a page, they might have multiple MLS sales on a page, or some of them would just have one per page and have more information. But the amount of information that they had on those pages was very minimal in contrast to what we have today in our MLS services online. And the assessor's information, if we wanted assessment information, we had to physically go to the assessor's office.
Don, what are you talking about? You had to actually go see people?
Yeah, we had to see people. So, and actually, as much as some of our younger appraisers, and hey, some of us older appraisers too, there's a lot of time that's involved in going to visit a local assessor or a local realtor, but that's what we did in those days. And so, yeah, most of that, if not all of it, can be accomplished by email, by phone today. But there was a huge benefit to doing that in those days, and that is, we talked about this before the phone call today, before we got started recording this. We talked about socialization of our young people today. And so as an appraiser, you really had to have excellent socialization skills, because you needed to have discussion people in the business. And so we exchanged our knowledge about what's going on. So this is really something that still needs to take place today. It doesn't happen as often as it should, but really good appraisers, even today, have to be good social animals. And so if you like to relate with people, if you like to exchange ideas, being an appraiser is really a great thing. You get to sharpen your mind every day, multiple times a day. Working with people, it's just, you may be working with them electronically to exchange ideas. So we're evolving, and we have these great tools of the internet and great access to the information. But as many well-experienced appraisers will tell you, is that you need to learn how to read between the lines. And sometimes there's just not enough information. There's not enough pictures to really tell you what's going on and why. There's a sale that's occurred that for some reason it's higher than our other comps, or for some reason it's lower than our other comps. And that's when we need to really pick up the phone or send a simple email and see if we can get the information that way. But, many realtors will respond very well by phone. They will tell you more than just going back and forth in an email or in a text. And after you've texted 2 or 3 questions back and forth, really what that tells you to do pick up
Pick
the
up
phone
the phone.
and just call the realtor. Yeah,
Have a
pick up the
conversation
phone
with
and call
somebody.
your have a conversation. Use your social skills and learn from everybody around you, because they all have something to contribute. You may not know that they have something to contribute, but this is how you learn what questions to ask, by asking questions and see what they say.
Yes.
And then maybe you hang up the phone and you realize there's something else you should have asked them.
Yes.
Well, then pick up the phone and do it again.
Call them again.
And
so Don,
most realtors are responsive.
I was going to say, speaking of doing it again, we're going to pause just for a second at like the 20 minute, 30 second mark. And Simon, you want to make one adjustment? He wants to make sure that your audio actually is coming across clean. He just wants to increase the crispness of it.
Good idea.
Because they can't see your big smile, but it's coming
otherwise
across.
we Well, yeah. You said it's all audio.
It is
right?
all audio, but you can the motion comes across in the speaking voice. You can definitely hear your smile.
There you go.
How is that sounding, Simon? You got it taken care of? All right. So we're back.
Very good.
Basically 1 minute later now at 21:21. So Don, it is fascinating to hear about your involvement in the industry and your experience of the evolution of technology. I think another fascinating thing for so many people, and myself included, is the many people and specifically mentors that you've had an opportunity to work with that have really shaped you as a professional and guided your career. Going all the way back, the lineage of multiple generations, and specifically, as you mentioned, your father getting involved in a family business. Who have been, kind of going back early on and maybe coming to more recent times, some of the most influential people that have helped guided you professionally and personally in this industry?
Well, I will tell you that some of our listeners probably know George Opelka. Well, his father was Greg Opelka,
Mm-hmm.
and Greg was past international president of the institute back in the days when there was an institute and a society before they merged together, and he was also president of the society, if my memory strikes me right. So he was one of many people that I was blessed to have as a mentor in those days, going back into the 70s and the 80s. Wow. And my father, of course, he was an SRA, and my boss in the savings loan business, he was an SRA and an RM. And when I left the savings loan business, I went to work for an appraisal firm that had about 27 full-time appraisers.
Wow!
And in that office, we had two individuals that were MAIs, one of which was also an SREA.
Oh, yes.
And then we had a couple of guys that were SRPAs that eventually the other two guys that were SRPAs that became MAIs as well. And then we had a variety of other guys that really had the knowledge and ability to be that if they were so inclined to. But you'll find that there's a lot of people that don't have the designations that are very skilled. Yes. They just have never taken the time. Sometimes it's because they work for firms. They have all the work that they need, and they don't really care about the designation. So I'm not trying to say that a designation isn't something that you should ascribe to, but certainly what it is that you should ascribe to, whether you get a designation or not, is education.
Yes. And
there's no such thing as having too much education in this business. So I worked with them for a couple of years. Then I went off to another firm that was a smaller firm. And by the way, in those days, which was in the early to mid 80s, that was really the dawning of the computers in those days. And Greg Opelka, who was the chief appraiser for Chicago area savings loan up in the northwest suburbs, he was one of the early guys that actually had a computer in his office. It was,
Wow.
of course, it had an old dot matrix printer.
Of course.
So these young guys probably don't know what a dot
I have
matrix
no idea
printer
the sound
is.
of that dot matrix printer.
But the dot matrix, yeah. So in those days, the software, of course, was very crude, and the appraisal forms were pre-printed and came on a roll. And so you'd feed this into the dot matrix, and of course it was a challenge to kind of line up the pages so that when it would print onto the dot matrix printer, it would be lined up properly to print on the form. So inevitably, people would have it lined up wrong and destroy, X number of copies. But that was kind of when I first saw that in Greg Opelka's office, it was like science fiction to most appraisers, and that was the first time I had seen anybody using a computer software program, and so Greg was like light years ahead of the rest of the appraisal profession when it comes to that. So I was blessed to know him, and I was on the editorial committee under a couple of guys on the Society of Real Estate Appraisers for a while back in those days. So I learned some things from that. And then I went to another appraiser that he was formerly a chief appraiser of a Chicago area savings and loan. And I had been doing work for him while I worked full time for other people, including all the way back to the days I worked with the savings loan staff just a few years earlier. And so I worked for this gentleman that was an MAI and was the chief appraiser of a Chicago area savings loan, and he went off on his own as well. And it was just good timing because I left the other appraisal firm that I had worked for a couple of years, and I had been doing a little bit of work for him in my off hours, and so I went to work full time for him. And so this was about, I want to say, about 1986,
okay,
maybe 1985, and I said about 1985, 86. That's right. So we got computers there, and we had computers from the last place I worked at too. So I'll back up a bit. The place that I worked with for 2 years, about a year after I got there, we had dual floppy drive computers, which again were very slow by today's by today's comparison with today's computers. So dual floppy drives, they were connected to a mainframe using day one software, and they were very slow. So the mainframe in the office was housed right there, and these 27 appraisers we had in the office were all hooked up via these little PCs that had dual floppy drive. So these were not the 3.5-inch floppies, but the old 5 1/4. I mean, they were really floppy as opposed to, the old 5 1/4s. They were like one step above the old microfiche. And so those of you who don't know what microfiche is, Google that. You'll get a good laugh. But the old 5 1/4s were indeed very, very floppy-like, and I think that's why we call them floppy drives. These were the disks we put in there. And so one of these had the software for the entire program loaded on it, and the other one was what we called a DOS disk operating system. And so first you loaded in the disk operating system to boot the computer up, and then you would load in the software for day one with the other, and you would be connected to the mainframe. So the mainframe's job was you were connected by a cord, basically, and that cord would be recording the information that you're typing into the appraisal report. And there was no internet connectivity or like that in those days. But this was a big advancement. And at the same time, like I say, I was learning from these other individuals in the office, in the big office. So we learned from each other, and somebody would run into a problem, we would share it with everybody else in the office, because sooner or later the problems aren't unique. It just, you haven't run into it yet. You will. And so by having a big office, we had the ability to exchange what was going on. And so I was very blessed. At first, I was very scared of computers. But my mother, back when I was in grammar school, forced me to go take typing lessons.
Oh, wow. Lucky you.
And I did not know years later that would become a huge blessing, because I typed my term papers in college that followed that. And then with the dawning of computers, well, I could type 70 words a minute.
Cow.
So, and the keyboard was pretty much the same.
That's amazing.
The keyboard was pretty much the same as your basic typewriter. And so I really adapted very fast because of the knowledge that I had of a keyboard to computers. And so then when I went to the next appraisal firm, it was smaller, that was run by an MAI. He owned the firm. And I had already been working for him like part-time for years by that time, but he went off on his own. So I was kind of his number one first full-time guy to work with him. And so again, I was really blessed to have somebody that knew the business. And I had already taken my class that was called SREA 201 through the Society of Real Estate Appraisers. And that was basically the theory class. So when I went to work with this other gentleman, I took the application class, income capitalization, which was SREA 202, and took that. And so I was blessed because I had somebody around me to ask questions to teach me the business. And so this small firm, this guy knew commercial industrial buildings backwards and forwards. And so I was really blessed to have him around. And I taught him about computers that I had learned from my previous place, because he knew absolutely nothing about computers. So Richard Hine and his right hand was Susan Shepard. Yeah, Richard Hine and Susan Shepard. They ran what is now called ACI. This is many years ago. So, so small firm that I worked for, we bought our first two computers, one desktop and one laptop. So I got the laptop most of the time, and the secretary got the desktop, and that was all we had in the office. But Richard Hine sent Susan Shepard out that worked for him, flew her out to help us set this up with the software, and it wasn't that difficult for me. So I basically tried to teach the boss, and I tried to teach the secretary, and so we slowly learned, and over the years added more computer terminals and so on, and grew that office. But I had other people around me that were seasoned appraisers that slowly started coming to work there. And again, we had the ability to exchange ideas. We could co-mentor. So this is really an important thing that appraisers should know is not only do you need mentors to start with, you need mentors your entire career. Point. I'm 45 years into this. Wow. I have 45 years into this. And I have many friends in the appraisal business, a number of which we bounce questions off each other regularly about the properties that we're working on. so I have appraisers that work for me, and some of them have more years of experience than I do, and they bounce questions off of me. I bounce questions off of them. You are never done learning. So as you come into the appraisal business, you need to somehow find ways to make contacts and relationships. And so there are multiple professional appraisal organizations. So you should find out what you can about each of them and join one or more of them. And take courses from one or more of them. And so that you can meet people and if possible, do it in a physical classroom, because whiteboards and things like that are great online, but it loses this personal contact relationship. So you use this to build on. And when you're looking for a job, if somebody knows you from these classes that you've taken, you call them up. This is called networking. And so networking is really, really important. As I know, Mike, I would think that you would concur with that. Networking is just, you have to do that all the time. This is, sometimes we accidentally find clients that way because you don't know who you took this class with, in years to come. They're going to become the chief appraiser of a savings and loan, a savings bank, a credit union, an insurance company, a government agency. And so you build these contacts over the years. And so I'm an advocate of doing things in person, because to me, it's very difficult to establish those contact relationships taking a class online. There is a time and a place for everything. So with COVID, the last couple of years, that was very appropriate to not be in a classroom and come home sick. But now this is really behind us, or as close to behind us as it's going to be. So to reestablish contact, to get back into these meetings and shaking hands, or at least waving to people, or doing the double knuckle thing, knuckle to knuckle instead of shaking hands. These are things that you need to do to establish those relationships, get those mentors. If you don't use your social skills, it's not just going to happen. Being an appraiser requires you to be a social animal, and to have those skills to just simply talk to each other. And sometimes, you're afraid to talk. It's just as simple as saying, "Hey, my name is Don Martin. Hey, my name is Mike Hobbs. What's your name? What do you do? Where are you from?" And it's how you start a simple conversation. It's really that's simple. So those of you that don't feel you have those skills, you do. You just don't know it. And it's like anything else. The first time you try and use your skills, you may be a little intimidated. You've got a room full of people that have a lot of years on them, but don't feel intimidated. One of the things that I have learned is that most people, they want some social contact. And so it's the same thing, really, even with dating back in my high school and college days. It was a simple thing that some guys, some gals wouldn't do because they were just timid. But the only way that you get people to say yes or no, for that matter, is to ask. And this is a very basic principle in business. It's not important how many people say no. It's only important how many people say yes. And if you haven't had anybody say yes, you either A, haven't asked enough people, or B, you need to sharpen your social skills. And the only way to sharpen your social skills is to use them. And you will be amazed at how many people in the appraisal business will be, or realtors, how many people will help you, but you have to ask. Will some say no? Of course they will.
It's a great point,
But
Don.
you will find those that will help you. That's how you will find your mentors, by
That is
asking.
absolutely a great point.
And it's okay if they
Yeah,
say no. Move on to the
very
next
true.
one.
And I think your example, although lighthearted and we had a humorous exchange, your example of taking dance classes back in the day actually allowed you to stand out. I don't know that it's any different today in the appraisal profession.
Yeah, you just got to ask. You got to knock on doors, and that you don't know who is or isn't looking for an appraiser. And so, even in today's market, where we now see a period of rising interest rates, make those calls, send those emails. Calls are a good thing. Sometimes you just can't reach people. Try the emails. And where do you start? You start at the beginning. So there are professional directories of the various appraisal organizations that are online. You can utilize those to find other appraisers to begin talking with. And where do you start? Well, you can start in the middle of the alphabet. You can start at the end of the alphabet and work your way backwards. You can start at the beginning of the alphabet and work your way to the end. And and you just keep going. And if you didn't get the right answer, once you go from A to Z, what do? You start over again. And maybe give it a little bit of time. But by the time you get from A to Z in the professional directories of an appraisal organization and have gone through all the different appraisal organizations, a significant amount of time will have passed. And so there's nothing wrong with starting over again, because maybe a few months, maybe a year has elapsed, and they didn't need you at the time that you called them the last time, but maybe 6 months or a year later, they may remember that you talked to them. And there are very few people that actually pick up the phone and call.
It's true.
It's personalization.
That is true.
An attempt to use your social skills. Yeah. And maybe you talk to somebody that doesn't have a job for you, but they maybe they know somebody that does. Go to the big banks, go to the big savings and loans, the big savings banks, the credit unions, the government agencies that use appraisal services. There's lots of government agencies that use appraisal services, a few of which are willing to start you out from scratch to train you, and maybe even help you pay for your classes if you're so inclined. And so it was always, when I first started, the organizations I worked for, they allowed me to take any class I wanted, and they would pay for them if I successfully completed them.
That's great to hear. That's
so
a great approach.
You've got to do your work on you got to do your work on your side. And most organizations today, maybe they don't do that, but you don't know which ones do and which ones don't anymore unless you start picking up the phone and start calling around.
I think your point highlights persistence in that not only does it get your foot in the door, but I think what's also so amazing, Don, is how much of a lifestyle and opportunities in life you have had or been able to experience, which is so impressive. And I think a lot of people who've been around the industry understand that. For people maybe newer in the industry or might even be considering the industry, I don't think they have any idea of how broad of an experience you can gain and how deep or how wide it may go. But it'd be fascinating if you maybe share some of the things you've had an opportunity to experience over 45 years as a profession, as opposed to just a practitioner.
Always go above what they ask you to do. So some individuals in every profession are just looking to complete what they were told to complete, and they don't go above it. And so try and go something above on every job that you do. If something isn't clear, it's ambiguous, attempt to do the research to make it as clear as you possibly can. Pretty much any experienced appraiser will tell you that there are those things that will always be somewhat ambiguous, but you do the best you can to explain it. And this is the value of having peers, because they've probably at some point gone through this before and can help you make a little bit more clarity, so it's not so ambiguous. So this is one of the points, actually, that the Appraisal Foundation brought out very loudly back, at least 6 or 8 years ago, and at various points in time before that. But they really wanted to make this clear to us as appraisers, is that we don't just slap data in a form. We need to explain and analyze. What are the implications of what you're telling us? Don't just throw data on a page. What does this data mean? Why are you making condition adjustments? Why are you making time adjustments? And to go into a little bit of detail about it. Doesn't mean you have to write a master's dissertation, but sometimes 2 or 3 sentences about various different things can really make it clear to the client and the intended user of the appraisal report.
That makes sense.
And it's our job. So this is one of the things that you should think about is that the appraisal, number one, is a risk assessment.
And what do you mean by that, Don?
And so in order to best
you want to say a little more about that? Because some people may not be as familiar with what you're talking about.
Sure. So it's a risk assessment tool, and an appraisal report is you're telling a story about the property. So there's a logical order of the appraisal, and those of you that are just coming into the business, you are just now learning this, that when you start inputting data on page 1 of a standard form 1004 URAR appraisal report, that information with today's software automatically populates into other areas of the form. And so this risk assessment tool, it tells us many things, some of which a lot of appraisers don't even know. Real simple things like the census tract data number at the top of page 1 on most appraisal forms off to the right side. What is the significance of that census tract number? Well, the first word, census, should give you an idea. Every census tract number represents 10,000 people. Every census tract number represents 10,000 people. So that's why you see areas like in areas that are growing. You see this decimal 0.01, 0.02 over time, because as the area grows, the census tract number is actually dividing. So maybe you had 8247, now you have 8247.01, 8247.02, 8247.03. And each one of those decimal numbers now represents 10,000 people. And so what is that information being used for? Well, this is part of, and I forget what the acronym is, but there's what they used to call, or probably still do call, the HMDA report. So this report is a log of every loan that's originated at the institution, and the census tract number, and the federal government and other bodies look at this number to track things like discrimination in housing, which of course today, especially today, but these last couple of years, has really been highlighted in what's going on. This is not the only time in 45 years that I've heard it being highlighted. It's just happening. It's happening again very loudly these last couple of years. And so they use that census tract number and correlate it with what's happening with appraisals, what's happening with loans. They know the breakdown of those neighborhoods as to how many people of different nationalities, different races, different income levels. And so there's a lot of correlation and importance to that census tract number. So some people are thinking, oh, it's just a stupid number. No, that number is really important to get it and to have it accurate. So the FFIEC, the Federal Financial Information and Examination Council, I may not have gotten that acronym right, but
Yes.
it's FFIEC. You can Google that. So the FFIEC, if you Google that, you go online, you can get the census tract maps using them for free and just inputting a property address. And in some cases, if it's new construction, it will not locate it, but you can put in a different address in the same zip code. It'll pull it up, and you can kind of work with the map and compare it with your own map to properly locate your subject property to make sure you have the correct census tract number. So some people don't know this. The appraisal software that they're using is sometimes wrong.
No.
Especially right after a census. So where are we now? We are shortly after a census. So especially in areas that are growing out in our collar counties, parts of Will County, Kendall, Kane, even Grundy, some of the census tract numbers that come up in appraisal software, some of it is wrong because the census changed some of the census tract numbers. So the information that's coming up in some of the appraisal software programs is correct 2010, but now that we've had the 2020 census, it takes several years before all the appraisal software providers catch up to that. So if you have new construction particularly, or in an area where you have an existing house, well, the new construction has changed your existing house census tract number, possibly, even though it may be 10 or 20 years old.
Got it.
So you may want to check that. So that's the importance of just a little simple piece of information in this risk management tool, because the financial institutions that many of us work for, and even government agencies with their policies, they're tracking discrimination issues. And so just because it's not mortgage related doesn't mean that there couldn't be a significant discrimination issue. And so we have the legal description that's in there that's available in many areas. You can get those online. And I'm surprised. Actually, I've been kind of shocked that there are appraisers that are in this business for 20, 30 years and even longer that don't utilize a complete legal description that's free and it's online.
True.
So those of us that have been in the business a long time, we know that the proper way to identify a property is actually it's not by its physical address, although that is required. It's not even by its parcel number, even though that's required. The best way to identify the location of a subject property is by its complete legal description. That is the best way to locate a property. You should be doing that on every appraisal that you do when it is available, quote unquote, in the normal course of business. So those of us, for example, that do business in Cook County, that includes Chicago and many other suburbs, we can go online to the Cook County Clerk's office and usually get a complete legal description. And so you could copy and paste the image of it in an addenda page, or you can type the whole thing into your legal description. Usually I just type the whole thing in.
That's a good way to go about it, being able to type it in and all that information being available and readily available now compared to before, where you'd have to go into different offices and meet with people and have those conversations. And even as you've touched on, there are experiences that you're seeing and or having now that have come up in the past. I think an interesting one, which we haven't talked too much about, but you could lend some perspective on, especially for people that maybe are 50 or under and don't have any sense of what's going on. And that is, how do you equate today's economic environment with the 45 years you've been around the profession, and what's an idea of what's coming and the impact both on the typical U.S. citizen, as well as on the profession?
Okay, so and I'll just throw a couple of things out. We can go back to it if you like, but there's other risk assessment tools in the appraisal, like flood insurance, and really quickly, flood insurance. Flood insurance. We use these again. We're using automated flood maps. And so one of the things that appraisers need to know, not only those of that are just coming into the business now, but even experienced appraisers may not realize that the flood mapping programs that they're using through their appraisal software and other services, and even those that the title companies use, sometimes they're wrong. And you as the appraiser are required to have the right answer, even though the maps that you used through those services might be wrong. So you need to pull up the maps and take a look at them because, when you rate a condominium, are you rating just where the condominium is located? You are not. You are rating where the project is. If you look at a 1073 condominium appraisal form, you will see that it doesn't ask you where's the subject located relative to a special flood hazard area, but where is the project? That's the entire development. So if there's 832 condominiums, it's not only the 832 condominiums, it's the clubhouse, it's the green areas, it's the walking trails that are all part of that HOA. If any little breadcrumb of that development is in a special flood hazard area, the box you check is yes, it's in a special flood hazard area. You might be a half a mile away. Subject property is not in there, but that's not the question on a 1073. Is the project in a special flood hazard area? So the appraisal software oftentimes comes back and says, no, it's not located, when in fact it is. Same thing even with single-family detached. Some of these appraisal software flood map programs that they're tied to are locating the improvements that are on the property rather than the entire property. So the rating on the special flood hazard area on a single-family detached property is not where is the house, it's where is the property. So if any portion of the property, it's just a little tiny piece of the back or a little tiny piece of the front, and it's not it's not anywhere near the house, it doesn't matter. That's not the question. The question is basically, is the property, any part of the property, located in a special flood hazard area? And I keep seeing these flood map programs come back and say no when the answer is yes, it is in a special flood hazard area. And a lot of our lenders and clients don't understand the language. They say the subject is not in a flood hazard area. Well, guess what, folks? A Zone X, which doesn't require special flood hazard insurance, is a flood hazard area. True. So all properties are in a flood hazard area. So the ratings, there are coastal ratings, and then there are ratings. Many of us in the Chicago area are familiar with Zone AE or Zone X. Those are the most common ones here. It doesn't mean that your property won't flood. These are just simply ratings. And so if you see a property that's sitting low, you need to talk about it, because some of these properties, they're not in a special flood hazard area, but they may flood from time to time. I know of multiple properties that flood, and they're not in a special flood hazard area. So you need to understand elevations. And just sometimes it's as simple as just, hey, stop and look around. Are you standing on low ground? That might be a clue. And the repairs that a home needs, okay, so it's not an FHA loan. It's not a VA loan. They don't require certain repairs. Does that mean that you shouldn't talk about the repairs to a property? No, you should talk about anything that you see to a property that needs a repair. Give it discussion. The appraisal is a risk assessment tool. Even though the terms of the loan may not require repair, this is a risk assessment tool. The lender wants to know really what are they buying. So in most lending transactions, we say that Joe homeowner or Jane homeowner is buying this house, but really it's the lender that's pretty much buying the house, because usually they have 80%, 90%, or some significant percentage of the bank's money, or the savings loan, or the credit union, or HUD's, or the Department of Veteran Affairs, whoever it might be. They're the ones that have the biggest risk in the deal. Who's going to take back that loan if the loan goes south? And if you didn't tell them about the repairs, if you didn't tell them about the flood risk because you measured it incorrectly, you cannot go back and blame it on the appraisal software. It's your problem. It's our problem to correctly identify. So how do you do that? You take a good look at the maps that you're using. Usually the maps are current and correct, but you may have to try and match it up with a plat map, plat a survey, and where is my subject relative to these maps? So these are just a few of the things about the risk assessment tool. So getting back to your question about the economy that we're now in, and we're witnessing rapid increases in interest rates. So this also relates to risk assessment, because with the changes in the interest rates, it can be difficult to see what is the direction. So with the use of things like the 1004MC, and of course we know that is not a perfect tool, and that Fannie Mae no longer requires it for various reasons. But it doesn't mean that it's an absolute bad tool. It is a tool that sometimes, in certain scenarios, can be a very helpful tool, but it doesn't mean that's where we stop. So we can look at what's happening on a monthly basis, what's happening on a quarterly basis, what's happening on an annual basis, and sometimes a combination of those things to see the direction of the market. How is the mean changing? How is the median changing? How is the volume of sales? How is the volume of homes under contract? Are the listing prices going up? Are they going down? Is the supply of homes beginning to increase? And so there's been, in many areas, the last couple of years, there has been a shortage in some areas where we have seen an escalation in prices because of the basic law of supply and demand. We don't have many houses. We have lots of demand. It puts pressure on prices to go up, just like any other economic good. Lots of buyers, few sellers. So now the tables are starting to change. There still may be a shortage in some areas that are very high in demand. This is no longer true in some areas that did have shortages. It is changing right now. And as interest rates continue to escalate and have other repercussions on the economy, because it's not just that homes will be more difficult to purchase at the same price because maybe the mortgage payment, maybe it's doubled already over the last year and will continue to get higher, although some people are looking at this, well, it will bring down home prices, at least in some areas. And so there will be, at least temporarily, quote unquote, a market correction with falling prices. How long prices will drop for, we do not know that. So we can go backward in time, and I'm not trying to blame any president that was in office at the time, but just people will recall Jimmy Carter, who was in office at the time, phenomenal humanitarian, and so on. So he was in office at the time, and I'm not trying to blame him. The Federal Reserve and the administration in Washington are largely separated. So We can blame the Federal Reserve. But again, why did the Federal Reserve do this 45 years ago? Well, they did it because we had high inflation. So they were trying to bring inflation under control. And it had significant impact into the real estate market with falling prices, a higher rate of foreclosures, because some people had mortgages at balloon mortgages that came due during the years of high interest rates. We had interest rates at that time of 16 and 18% in the Carter years. So we're not at that level yet. We're not having a contest, so we don't want to hit 16 or 18 again. But we are expecting interest rates as high as 8% or higher before the end of the year, and interest rates possibly to escalate well into the second quarter, maybe even into the third quarter of next year. We hope, really, as appraisers, or those of us in other areas of real estate, or both, we hope that it isn't. We hope that inflation is getting under control, and interest rates will at some point level off. We don't know exactly when, and we hope it will come down a little bit. Historically, my father used to tell me that interest rates were historically around plus or minus 5%, that would be typical. So the low rates of 2 and 3% that we saw were a phenomenon, and the 16 and 18% we saw were a phenomenon. And as I was entering into the appraisal business at 16 and 18% interest rates, to me that we thought that was going to be around for forever. And when interest rates started to drop, I bought my first home at 13.9%, and I was glad to get it. And 13.9%, and that was actually a discounted rate because by 0.5%, it would have been 14.4. But because I worked for a savings and loan as an employee, as long as I remained an employee, I got that 0.5% discount. And and at 13.9, we thought, oh, well, they've fallen, but we'll probably never even see 10% again. And so over the years, they continued to fall and fall and fall, and had, as they continued to fall, it seems like every time they fell, there was a wave of refinancing. And so we will continue to see activity. There are people that have to move for their job. There are people that have to move for many reasons. And we will see people that will continue to refinance or to get equity loans because they have a large medical expense. They need to send their kids to college. They need a new roof on their house, and they simply don't have that kind of cash just laying around in the bank. So we're going to continue to see activity. We don't know how busy it's going to be. We see things that we can, go online and Google, and we can see predictions, but nobody really knows these things for sure. And looking back over the past 45 years, there's going to be a lot of people that are going to make predictions, as they are right now. And most of them are going to be wrong, and a few of them are going to be right. And the ones that turn out to be right is just mainly by luck. If you have 100 people that guess how many jelly beans are in the jar, somebody's going to probably be right, and most people are going to be wrong. And so they're going to think that the person or persons that are right are geniuses. And then the next economic change takes place after everybody bought their books and thought they were geniuses. Then the next time around, they make a prediction. Everybody throws their money at them, and they're wrong.
That's a good point.
Because the likelihood that an economic forecaster is going to be right all the time is
real close to zero.
Real close to zero, as far as I can tell. So they're real close to zero. But we do know basic things, and that is that rising interest rates mean falling prices, and the higher the interest rate, the greater the negative impact on prices, and it will relate to other sectors of the economy because there's fewer homes being built. The contractors that are building them are less able to afford other things that they're buying, and it will have, as they say, a domino effect and ripple through the economy. The severity of that ripple will depend on a variety of factors. The biggest one being how fast the interest rates rise, how long they rise for, and exactly how high do they get. And so we nobody can predict that.
So how, given your experience both as a professional and a homeowner, and looking back over your first home loan for home first mortgage at 13.9%, what type of data or metrics do you pay attention to now in the gap that you stand in for lenders around risk assessment? Yeah, you want me to repeat that for you?
Would you?
Can you hear me now, Don? Yeah, thanks. No problem at all.
Yeah,
I was just asking,
I'm sorry.
Given your experience going
sir.
back 45 years in the industry and your first home that you purchased at 13.9%, and recognizing that, especially in the lending capacity, the appraisal is a risk mitigation tool, what type of data or particular analytics do you pay attention to help fill that role of a valuation analyst to help clients make informed decisions?
Well, I'm going to say everything. So NAR has a pretty smart guy. I believe his name is Lawrence Yun. He's a big economic forecaster. I've actually talked to him in person many years ago. And other organizations I'm part of have had him for a guest speaker. So that is how I had my opportunity to personally talk to him. So he says a lot of things that are pretty spot on. But again, he's not perfect either. And most of the things that he says are somewhat generalizations. But he is just one of many economists to listen to. But as far as how to relate to what are we looking at for our appraisal, so the data that we have for residential properties is pretty well expressed in we have here in the Chicagoland area, we have what's called MRED, the Midwest Real Estate Data, and they have a variety of tools in there that you can use to help track what's going on. But very, very, very simply, we've kind of hit on it already. Is the supply increasing in the markets that you're looking at? And the sellers sometimes, as they see this happening, their realtors are in tune with their markets, and the asking prices are beginning to drop. And so I'm not seeing a lot of dropping in the asking prices in most areas, but am I seeing it in some? Yes, I am. I won't identify which areas those are, but it can be clearly seen by looking at those statistics in the MLS and looking at the asking prices. And there are a couple of pocket areas out there that the average asking price is now dropping below prior sale prices, and the sale to list ratios are at that 100% level or slightly below now. So we've seen areas in the Chicagoland market that over the past couple of years have been 103%, 105, 106% of the asking prices because they've been selling that quickly. And so those numbers are coming down now in many areas. So you have to watch those and how it relates to your subject property. And what are the closed sales? What are the listings? And you have to weigh all that information and try and determine what it means. And this is really a tough call for an appraiser. Do we use 489 sales that may have occurred in the market, or do we use 13 sales that are most like our subject property? So this is a judgment call that is oftentimes difficult to make. So if we use too little data, it doesn't have significant meaningfulness. If we use too much data, it similarly loses its meaningfulness because it's based on too many different types of properties and too many different price ranges and too many different architectural styles. And so where do we draw that line in? Do we draw it if we're doing a 3-bedroom, 2-bath home? Do we just look at 3-bedroom, 2-bath homes? Or do we expand that to 3-bedroom, 1.5 to 2.5 baths? Maybe we have a split level. We just look at split levels, or do we look at what some people call mid-levels, some people call bi-levels, some people call raised ranches? Where do we draw the line for what architectural style we're looking at? So it's in a case-by-case basis. It's just like people ask me, well, what adjustment do I make for a fireplace? Well, I can tell you that the fireplace on the $1 million home where the land is worth $100,000 is probably going to be higher than the area where the home is $30,000 and the land value is either nothing or close to it. And so the home that's $30,000 is likely that the fireplace is worth nothing. It adds nothing to the value. And in the $1 million home where maybe the land value is $100,000 or $200,000, the fireplace probably has a significant contribution to value in the thousands of dollars. How many thousand? That's where the paired sales analysis, comes in to do this at both levels, the $30,000 house or the $1 million house. And so you can do a paired sales analysis, and my guess is the $30,000 house is more often than not the fireplace going to be worth
That's
zero.
A good point. That is definitely a good point. And Don, that brings kind of to a great kind of question to both kind of conclude your, in this case, just amazing generational experience, as well as, hopefully seed 4 more generations going forward. And that is for someone who's maybe, in the first decade of their time in the profession, or maybe in their first series of educational courses, or maybe even considering the industry as a professional pursuit. What words of wisdom would you offer them?
Don't give up. If this is something that you want to do, then I hit on this earlier. It's not important how many people say no. It's only important how many people say yes. If nobody said yes, then you haven't, either A, you haven't asked enough people, or B, you need to figure out how I sharpen my presentation, either with my verbal skills, or how do I write a resume? How do I present myself? How much information is too much information? How much is not enough? So it was one thing I was actually blessed with many years ago when I left the savings and loan business. The personnel director was an acquaintance of mine, and I actually was blessed to have him help me, teach me how to write a resume. Sure. Yeah, they taught me that in college, but different professions write their resumes a little bit differently, and there's a lot of similarities, but there are some differences too. So to find somebody, how did you get your job? What did you use to present to firms that were looking for an appraiser? And some firms, maybe they could care less about a resume. They want to know how long you've been in business, and maybe just talk to them a few minutes about what is it that you want to do? What areas that do you want to serve? And what is it that you have to offer the appraisal firm that you come to? And how hard are you willing to work? If we're busy, are you going to work beyond 40 hours, or are you looking for that life work balance? I mean, that's a very difficult thing. Some people have been really successful to have a great life work balance, and they work their 40 hours, they're done. I have a couple of appraisers that work for me, and if I want to talk to them in non-working hours, I might as well ask to pull their teeth out. But I have other guys, that are
It's different.
that are kind of like me. I work 90 to
You're
100
an Iron Man. I mean,
hours a week.
yeah, I totally appreciate that.
So, but I don't know about that. But, show what you're willing to do to come to the table, and even if you want to work the standard 40 hours a week, okay, that's great. Just what are you bringing to the table? What are you willing to do? Okay, if need be, instead of going 10 or 20 miles, maybe I'll go a little bit farther. I'm going to need help because maybe I'm going into an area. So USPAP has this thing about competency, that if you're going into an area that you're unfamiliar with, you simply ask for help to get the job done properly, because competency does require to get it done properly, even though it's, and to let the appraiser or firm, whatever that you're going to work for, give some indication that you comprehend and understand the basic principles of the appraisal profession and the basic things that you learned in USPAP, and just keep reading this information over and over again. So I will tell you that a number of years ago, Danny Wiley, who was one of my instructors, and he was also the chairperson at one time of the Appraisal Standards Board, but he was the instructor that taught instructors. And Danny, he is I don't want to defame other USPAP instructors, because there's a lot of people that really know USPAP well, but at least that I understood Danny and the people I've known before and since, is that he knew it backwards and forwards, second to none, perhaps others equal, but second to none. So one of the things that he told me about USPAP, and told the whole class, is that he has read USPAP cover to cover at least 100 times and doesn't understand it.
I don't know. That makes me feel good or bad, dude. No, I'm just sitting there like, that's something else.
Well, I would make as a parallel to Scripture, to the Bible. So USPAP is the appraiser's Bible, as opposed to the Christian Bible or the Quran or whatever you use as your guiding light in life. That these documents are very difficult to understand, and every time you read them, you understand them more. And so that's really what Danny is communicating, is that you don't stop learning, not just USPAP, but everything about the appraisal business. Read it again and again and again and again. And even 45 years later, I still have those aha moments. Well, gee, that's what they really meant, which is different than what I thought it meant maybe 45 years ago. But don't be disappointed in yourself because you didn't quite get it, or you're not quite getting it now. It just means that you have to keep going. You don't give up. If this is what you want to do, there's only one way, and that is to continue to move forward, do the best that you can. Roosevelt said many years ago, and I will paraphrase, do the best you can from where you are with what you have.
Done.
And so
That's
those are
fantastic.
real basic tools. One of my fellow friends that's an MAI, he uses that statement all the time to pick on the MAIs again. And again, this is not to defend anybody that's not an MAI, because I know many
Uh,
brilliant people
we
that
understand,
are
Don.
that
We
are not.
understand.
No question about it. And I know people. I know people of every designation that sometimes I have to scratch my head and wonder how they got it, and that is not to defame any specific designation. It's just to make a generalization that we need to continue to learn, no matter who you are, no matter what your designation is or is not. You need to continue to learn. So it's another USPAP principle that about competency is it's not okay to stay the same with your education. That is not okay. You need to continue to learn. That is a basic USPAP comment about competency. It is not
I think
static.
that's
It is
absolutely
fluid.
fantastic, Don. Between the have to continue to learn, as well as the Roosevelt quote, it is it's a testament to not only you and what you've accomplished in nearly 5 decades of being in the industry, but also the people that have impacted you, and more importantly, all the many people in your different involvements around the industry and teaching at universities as an instructor of USPAP and other activities, that you exude that, and it comes clearly through. And really grateful for this time, and thank you so much for sharing so much. And there's still so much more to you, Don Martin, which is what's so impressive. And what I'm grateful about is you're very helpful and approachable individual, much as though you guide others to take that into account. Like, reach out, and maybe they can assist you, maybe they can't, but if you don't ask, you don't know. Don, how can people get in touch with you if they'd love to pick your brain or be one of those individuals who bounces ideas around?
Well, there's a couple of different ways. One is they can find me very simply, Martin Appraisals. There's an S
Okay.
on the end there, martinappraisals.com, and that'll get you to my website. And there's different articles I've written for different trade journals over the years that are there. And so while some of those articles are now, like 15, 20 years old, the principles addressed in those articles, they don't they don't really change. Our tools of to find the information change, but the basic aspects of what is an over improvement, what is an under improvement, what is functional obsolescence, what is external or many people say locational obsolescence, external obsolescence, or many years ago extrinsic obsolescence. It all means the same thing. So there are articles that I have had the opportunity to write that are on there, and particularly for people that are trying to get into the business. These may help you. You're welcome to send me an email. My email address is on that website at martinappraisals.com, or you can send me an email, Don at martinappraisals.com, and I'll be happy to help you if I can, or you can call me 708-609-8315. If I don't answer, maybe I'm out on an appraisal appointment, maybe I'm teaching class, or maybe one of those
That's a
rare
good thing.
opportunities I'm actually sleeping. Uh, yeah. Just leave a message. Well, because I do have some clients that don't
No
know
boundaries or
where to
boundaries.
draw the line at. When I go to sleep, they don't know boundaries. So late at night when I go to sleep,
Good for you.
I actually turn all sound off. So I'm yeah. Because if I didn't, there would be nights I would not get a decent night's sleep. But other than that, hey, leave a message. I will get back to you, and I don't have all the answers. I want to make that perfectly clear. I do not have all the answers, but I usually, not always, I usually know who might have the answers. See, this is the value of having peers. I have peers that I bounce things off of, and it's kind of like the old Clint Eastwood saying, which ties into competency. A man or a woman, a man has to know their limitations. So that's an old famous phrase out of a Clint Eastwood. Yeah, a man's got to know his limitations. So that is a very USPAP type statement that ties again into competency. And so I cannot answer all your questions. And even after 45 years, I don't have all the answers. I was asked to appraise a water reclamation district once. That's not within my field of expertise. I was asked to appraise a missile silo once. That's not within my field of experience. I was asked to do a very large quarry. I declined on that as well. So you will never, and maybe I'm wrong, but I don't think there's any individual appraiser that knows all things about all property. So you have to recognize that. And if you want to do that, you have to find somebody that does know how to do that type of property, and ask them to teach you. And if they don't want to teach you, well, you've got to pass it along to somebody. I do have somebody I know that all they do is large hotels.
That's impressive.
All over the country. That's all they do.
Specialty.
Well, they're great at it, but that's all. Yeah. And if you ask them to do a 20,000 square foot industrial building that's 10% office that has 16 to 20 foot ceiling height, which is a pretty standard size industrial building with 10% office, they might not have barely a clue. Yeah, because they don't have the data for it. They're not interested in doing it, and so on. So there's nothing wrong with passing on an assignment that shows that you understand USPAP and knowing what it is that you can accept and can't. And if you get out to a property and it's beyond, there's nothing wrong with picking up the phone or sending the email or whatever to your client saying, hey, this turned out to be something
didn't expect
that I'm really not comfortable with. And so you have to back out of the assignment. And maybe you don't get paid for any time you put into it. And that's a difficult thing in your mind to deal with. But sometimes that is the best answer, is to walk away and get zero paid for it, and not have to deal with competency problems or reviews from people that do know what they're doing. And frankly, you didn't. There are times that, as I said, I will in an assignment, and sometimes that is often the mark of a really good appraiser, is knowing when to say no, knowing when to decline. And if you are ever uncertain about what a client is asking you to do, just because they have been around for many years does not mean that they are asking you to do something that is legitimate. If you feel the slightest bit uncomfortable about what you are being asked to do, start calling some of your peers and find out by asking them. Just because a lender or a government agency has been around forever doesn't mean that they are telling you the correct thing. It doesn't matter what government agency. Because I can cite examples that I've been through in my career where it proved the government agency was asking me to do something.
Well, and it wasn't the agency asking you to do something. So it was a person at the agency asking you, and that person may not have even known what their agency was or was not in line with. Yep.
Right. Because they misunderstood either Illinois law or whatever state you might be from, or they misunderstood USPAP, which, again, it's a difficult thing to understand. It's a difficult thing to understand your respective state laws and how they affect you, as well as all the various types of regulations from FHA, VA, USDA, and various others that have overlapping requirements on what it
Yes.
is that we do for a living. So you're not sure, and if
Just
you're
decline.
uncomfortable,
That's
just
definitely the
simply
case.
decline the
Yep,
assignment.
that is
Do not
definitely
be
the case.
pressured in. Yeah. Yeah, knowing when to say no. See, you have two choices that come into play on every single assignment: is, do I want to keep my license,
Yes.
or do I want to keep my
Yes.
client? We hope to keep both, but if you have to choose one, please choose your license. Keep your license. If you lose the client, you'll have a chance to find another one. If you lose your license,
That is a great
you're
point.
done.
And what a great place
It's
to
over.
end, Don. Thank you so much. This has been an amazing time and so insightful. Wow. All I can say is thank you. This is a dearth of information and insight for people to do well and be a part of this profession for a long time to come. Thank you very much, Don.
Thanks for listening to this week's episode of Zings, Appraisers on Purpose. We hope you enjoyed learning from the amazing life paths and achievements of our guests. Don't forget to like us on LinkedIn and other podcast channels to hear more from appraisers and valuers regarding their life and their work. If you have any suggestions or questions for future episodes, we'd love to hear from you. Just send us a message on LinkedIn and we'll be sure to get back to you. Thanks again for listening, and until we're together again for the next session of Zings, Appraisers on Purpose, create the change that you seek.